Did you know that every time you buy a coffee, fill up your car, or even book a holiday in Australia, you're paying a tax that's quietly working behind the scenes? It's called the GST. But how does it work? Why is it so important? And most importantly, how does it impact you? Stick around as we dive into the world of Australia's Goods and Services Tax, GST. And by the end, you'll have a clear understanding of how it affects your wallet. What is GST? The Goods and Services Tax, GST, is a consumption tax that applies to most goods and services sold or consumed in Australia. It's set at a flat rate of 10%, meaning that for every $1 you spend on a taxable item, 10 cents go to the government. Unlike income tax, which is taken from your earnings, GST is charged at the point of sale and is included in the price of goods and services you purchase. So what exactly does broad-based mean? In simple terms, GST applies to a wide range of products and services, from electronics and clothing to professional services like legal advice. The tax is collected by businesses on behalf of the government, and it's included in the price you pay at the checkout, meaning you don't have to worry about calculating it yourself. One of the main reasons GST was introduced was to simplify the tax system. Before GST, Australia had a range of different taxes on goods and services, which made things complicated for both businesses and consumers. The introduction of a single, uniform tax on most products and services was meant to streamline this process and provide a more efficient way for the government to collect revenue. But not everything is subject to GST. Let's dive into the exemptions and special cases. GST exemptions. While GST applies to most goods and services in Australia, there are a few important exemptions. Some items are GST-free, meaning they are not subject to the 10% tax. These exemptions are typically for essential goods and services that are considered vital for everyday living. Let's take a look at some of the most common exemptions. 1. Basic food. Items like fresh fruit, vegetables, bread, and milk are GST-free. This exemption was introduced to ensure that basic living essentials remain affordable for consumers. 2. Health services. Many medical services, including visits to the doctor, hospital care, and some prescription medications, are also exempt from GST. This is to ensure that access to healthcare remains as affordable as possible. 3. Education. Tuition fees for primary, secondary, and tertiary education are GST-free. This exemption applies to both public and private education institutions. 4. Exports. Goods that are exported outside of Australia are not subject to GST. This helps Australian businesses compete in the global market by keeping their prices competitive. 5. Certain financial services. Many financial services, such as bank fees and insurance premiums, are also exempt from GST, although some related fees may still attract the tax. These exemptions help to ensure that the GST system is fair and that essential goods and services remain affordable for all Australians. How is GST calculated? Now that we know what GST is and which goods and services are exempt, let's talk about how GST is actually calculated. The GST rate is a flat 10%, and it's usually included in the final price of goods and services. This means that when you buy something, the price you see already includes GST. For example, if a shirt is priced at $100, the GST included in that price is $9.09, because the formula to calculate the GST portion of the total price is price 11. The remaining $90.91 is the price of the shirt itself, and the $9.09 is the GST that the retailer will collect and send to the government. On the other hand, if you want to calculate the GST for an item that is GST-free and you want to know how much it would be with GST included, you simply multiply the base price by 10%. So if you're buying a product worth $200, adding GST would make it $220. For businesses, things get a bit more complicated, especially when it comes to accounting for GST on sales and purchases, which brings us to how businesses manage GST. How businesses handle GST. For businesses, GST is a bit more than just adding 10% to their prices. When businesses sell products or services, they charge GST on those sales. This is called output tax, but businesses also pay GST on goods and services they purchase for their operations. This is called input tax. Here's where things get interesting. Businesses can claim back the GST they pay on their purchases as a GST credit. For example, If a business sells goods worth $10,000 and charges $1,000 in GST to its customers, but it has also paid $500 in GST on the goods it bought to make those sales, it only needs to remit $500 to the government, the difference between the output and input GST. This system is called GST offsetting, and it ensures that businesses aren't paying GST on top of GST, which could drive up prices for consumers. Essentially, businesses act as tax collectors for the government, passing on the GST they collect from customers while deducting the GST they've already paid. Every quarter or annually, businesses need to lodge a Business Activity Statement (BAS) with the Australian Taxation Office (ATO), which details their GST collections and claims. If a business collects more GST than it paid, it has to pay the difference to the ATO. If it paid more GST than it collected, it can claim a refund. The impact of GST on consumers. So how does GST affect you, the consumer? For most everyday purchases, the impact of GST is simple. You're paying an additional 10% on most goods and services. Since the GST is included in the final price, you might not always notice it, but it's there in almost every purchase you make. While a 10% tax might not seem like much on smaller items, it can add up over time, especially for bigger purchases like electronics, cars, or home renovations. However, the exemptions for essentials like fresh food and healthcare help ensure that GST doesn't overly burden low-income households or those needing medical care. One area where GST might catch consumers by surprise is when shopping online, especially from international sellers. Since July 1st, 2018, Australia has required that GST be applied to low-value imports, meaning that if you buy something from overseas worth less than $1,000, you'll still need to pay GST on it. Why GST is important for Australia? The revenue generated from GST plays a critical role in funding essential public services in Australia. GST is a significant source of income for the Australian government, and the funds collected are distributed among the states and territories to support services like healthcare, education, infrastructure, and public transport. Unlike income tax, which is progressive, meaning higher earners pay more, GST is a regressive tax, meaning that everyone pays the same rate, regardless of their income. This has been a point of debate, as lower-income households tend to spend a larger proportion of their income on goods and services subject to GST. Despite the debate, the introduction of GST helped streamline Australia's tax system, replacing a range of inefficient taxes with one uniform tax, making it easier for businesses to comply and for the government to collect revenue. If you found this video helpful, don't forget to like, share, and subscribe for more content like this. Let us know in the comments if you learned something new about GST or if you have any questions about how it affects your daily life. Thanks for watching, and we'll see you in the next video.